Caterpillar because it is the big boy in the space. Remember, earth-moving equipment, diesel engines, that's for power and marine, and electric locomotives and other such things. Heavy mining equipment. They also bought a big open-face coal mining Bucyrus business that actually does underground mining and that sort of thing as well. You'll see these vehicles also in construction and also in related areas. It's the market leader because it's the most innovative of all the global companies. Highest quality, perhaps highest price, but they always argue that that gets the end user a better deal in the long run. Market capitalization is back at its all-time high, just around $70 billion. Price earnings ratio at that level, 27.99. Dividend yield, 2.64. Let's go straight to the graph, because in a way, with a stock like this, it would almost be better to show a 50-year chart than a 5-year chart. But what will reveal there is that 2015 was a very difficult year. Commodity prices were tanking. Everybody thought this was the end of the end, and yet 2016 turned out to be the beginning of another beginning. That's how it goes with these guys.
Absolutely. They are very cyclical. You know, they're obviously their future depends on the cycle, just as the mining companies. The only difference is, you know, the mining companies, it's a little bit more transparent as to when it comes through. Whereas with these kind of stocks, it's a little bit harder to predict when the miners are going to support
exactly
them.
Because you've got 2 orders of lag. In other words, the mining companies are in, you know, hell and damnation mode. Everything's going down, and then the next thing, no, it's not. Then they've right-sized, but they will delay probably by at least 6 months or a year before they start to, you know, commit to new orders. So someone who I know who works for Caterpillar here in Southern Africa was telling me that if they had 10% or even 15% more vehicles now to sell, they'd be able to easily sell them. That's the kind of market they're in at the moment. They're running with a bit of a deficit.
Which is great. And the stock is, you've seen it in the stock price. I mean, the stock's come off its lows quite substantially. Look, last quarter results, they did have a 10% increase in revenues, 45% increase in earnings, so that's good. It out-surprised the market. The market was not expecting those results. You know, talk from executive management is positive. You know, they've had a few years of really bad results.
And during those bad periods, they took a lot of pain and did a lot of optimization of the organization. You know, they're headquartered in Peoria, which is close to Chicago in the central area of the United States. They downscaled certain of their manufacturing facilities. They, you know, made certain improvements to products. They remained innovative and design-oriented and looking at you know, cost management within production. So in an environment where then the orders return, they're perfectly poised to make lots of money.
The margins will be a lot higher, yes. I mean, they've saved it's estimated about $2 billion worth of cost per annum. They've consolidated about 30 factories that they announced in 2015, and that's still a process that's going on. So there's definitely that cost-cutting aspect coming through. You see now revenues are not at peaks yet, but earnings are at peaks, you know, so that's good.
Management change. So this is a company that has got a very deep bench. Doug Oberhelman, who was the CEO, went into an executive or semi-executive or maybe non-executive chairperson role, and Donald Umpleby is now the CEO. He was running, I think, one of the divisions that, you know, has now been elevated. I guess the real question here is, this is a company which looks good enough to hold right through the cycle. I mean, we used to own this for clients, but that was in the big boom from 2003 right through to 2010, when it was like one way and that was the highway and that was up. Since then, we just got nauseated by the wild moves. But I guess in hindsight, we could have just stuck it out, because this potentially was a more reliable way to play the resources type boom than then. The trouble is, I just worry that some other global events that might intercede could see this one fall back from its current level, around $120, back to $60 again.
Yeah, I agree with you. I don't think the fall would be that drastic, but it has run really strongly. The stock is at all-time highs. It's quite expensive, you know, it's quite expensive at the moment. And there are, you know, unforeseen things that can happen, like China, you know, you get Chinese companies that start manufacturing equipment mainstream. It will be a lot cheaper, a lot more cost effective than these big brands.
Just on that score, you know, we're talking about these high-end branded companies, but they have lots of competition from unknown Chinese companies that go to the trade fairs where they demonstrate the latest equipment, take pictures like you can't believe, rush back to the factory out somewhere in rural China, manufacture something which looks quite similar, but doesn't necessarily perform as well, because at the end of the day, it's just been put together on a sort of reverse engineering basis.
And that's been the defense of these guys for so long, you know, but I think that's changing.
I think Caterpillar did, though, purchase one of those Chinese manufacturers, not right from the very, very floor, but they decided they were going to not get taken in that environment, so they've got one of their own sort of brands, which they sell as a sort of a discounted version. Because that's the point, isn't it? That they keep telling their customers, don't go with those guys, because you will think you've got a good deal, but 6 months' time you'll be weeping because the thing will basically be falling apart.
Absolutely, yes.
And Caterpillar, it seems, has been able to maintain its relationships with its core corporate clients at a level which justifies that argument.
Yeah, it's very entrenched. It's, I mean, it's a
but
strong
anyway,
brand.
you're saying that you're worried that it's at the top end.
I think prospects look good for the company. They really do. I think you're going to see an increase in revenues and an increase in earnings. I'm worried that it's a bit expensive. I'm worried that the prices run a bit too hard. So I do think you will see earnings increasing coming forward. I just don't know if it's justified.
So you're going to go not hot.
I'm going to go mildly not hot. Yes.
Yeah. Okay. I'm going to call them hot just on account of the ongoing strength and operational outlook there. But I can see that one might have cause for some concern.